Welcome back for the 17th episode of CBA's Talking Economics with the Commonwealth Australia's Chief Economist, Stephen Halmarick. Stephen, thanks for joining us.
My pleasure, thank you.
Stephen, after holding rates steady at 4.1% since June, the RBA lifted the cash rate for November to 4.35%, 25 basis points increase. Can you talk us through that decision, what you feel is the future direction of rates?
Yes, well, the new Reserve Bank Governor, Michelle Bullock, made it pretty clear before the November board meeting that they were worried about the trajectory of inflation, whether inflation would take too long to return to the 2 to 3% target range. And then in late October, we got inflation numbers for the September quarter, which did show inflation decelerating, but not quite as fast as the Reserve Bank would like. The annual rate is 5.4%. So early in November, they decided that they needed to raise interest rates a little bit further to really try and get that inflation rate back to target in a reasonable time frame. So another 25 basis points, as you said, to 4.35%. We think our base case is that we've seen the end of the rate hike cycle, that 4.35% will be the peak. But it's worth saying that the risk for that view is for another rate rise, perhaps in early 2024, after we get the next inflation reading late January. So interest rates are still, the Reserve Bank still has a tightening bias, but we think the base case is we're on hold now for an extended period.
So after this latest hike, how will that impact business?
We've seen a continued moderation in the pace of economic growth in Australia. So businesses are going to have to be facing that challenge of higher interest rates and a slowdown, particularly in consumer spending, as we push into 2024. At the same time, though, we've seen house prices continue to rise, a big increase in population growth, and a lack of supply of new dwellings. So there's definitely some cross currents in the economy at the moment.
Now, you've just released the CommBank Household Spending Insights for October. What did that show?
Yes, well, so for October, the HSI definitely showed a pretty significant slowdown in household spending. It was down 1% in the month of October, and that followed some signs of resilience in July, August and September. But the resilience we'd seen previously was really around some big one-off events, so spending on movies and the FIFA Women's World Cup in particular. So absent those big events, spending was significantly weaker in October, led down by things like hospitality, recreation, food and beverage. 7 of the 12 spending categories were weaker on the month. The only categories that increased were things like utilities and transport, education, insurance. Some of those things people don't like spending more money on. So you can definitely see the effects of the higher interest rates flowing through household budgets, reducing spending on some of the discretionary items, but essentials still holding up.
Always interesting data. What data should business be on the lookout for in the near future?
Well, so between now and the December Reserve Bank board meeting, we've got a number of key data points. So retail spending for October, the official numbers will be out before the end of this month. We expect to see that fall by about 0.6% on the month. We also get the monthly reading of inflation for October. That should show inflation around 5 to 5.25%. So decelerating, but not quickly enough. And also we get GDP numbers, the third quarter GDP numbers early December as well. And we think that's going to show a continued moderation in the pace of economic growth here in Australia.
See you again in December. Thanks for your time today.
My pleasure. Thank you.